Well, good morning, traders. I live in a country that has an abundance of natural resources, and gold is one of them. Check out my video on natural gas. I'll put a link at the end. There's been a lot of speculation about where gold's going. I'm feeling pretty bullish about gold for the rest of 2023, but we've got some interest rate hikes looming from the US, probably quite a number more. When I say quite a number, possibly one, two, or three. And that's going to put pressure on gold as bond yields rise, as the dollar rises, and there's more interest in the US dollar. What's interesting about gold is that we reached the top of this channel line, and after a very prolonged rally, a very strong rally, very overbought actually, and we touched exactly this resistance level at 1965, $1,965. It also happened to be this downward channel line, and we touched it right at the top. If you remember, I wasn't sure if we were going to blow out through the top, towards 2000 and perhaps above, like we've seen before, or if we would correct down from there in order to gather some more liquidity, some more buyers, pick up some more volume a little bit lower down. And that's exactly what happened. We had a big drop off after various bits of news from the US, particularly interest rates and jobs, etc. And gold just really collapsed off exactly that level. Unfortunately, I wasn't short. I'd been shorting around about this level in the middle for quite some time. I wasn't sure when we rallied above that little resistance area if we'd have a blowout or not. I preferred to take the cautious approach and unfortunately missed the move down. But now it's started. So where do we go from here with gold? Well, I think we're due for a bit of a correction. We've already had some, perhaps a little bit more, and we've got some good support beneath us at around either side, 25 points either side of the $1,800 level, and that's between 1775 and 1825. And that region there is actually in this Fibonacci support zone as well, between the 38 and the 50% Fibonacci, with that $1,800 level right slap bang in the middle. So that pink zone there is where I'm going to be looking to buy gold, and looking for gold to rally back up towards this red line at 1877, call it 1880, somewhere around there, and then eventually retest this top that we formed just a few days ago. And that would be the area where we'd be looking to see what gold finally wants to do. Either we'll get a double top there and gold will carry on moving lower, and perhaps even a deeper correction down towards perhaps 1775 if we didn't get there on the first attempt, or even 1750. You can see these move in $25 intervals. So we've got 1700, 1750, we've got 1775, we've got 1800, 1825, 1850, where we are right now, just about, and so on and so on. So we're moving in $25 increments. I think we're going to drop another $25 or so down to 1825, possibly 1800, possibly 1775. These are the areas to look to buy gold, and particularly focus on this pink area between the 50 and the 38% Fibonacci retracement. And then we'll be looking for some consolidation there. This might take some time, simply because we're going to see more interest rate hikes coming through, and we're going to see the yield on the US dollar increasing. You can already see that in bond yields, and there'll be more interest in investing in the dollar. There'll be more interest back into carry trades against currencies like the yen and the euro. So we expect to see the yen weaken a wee bit, and perhaps the euro, and so on, as gold consolidates around this area in the pink zone. So just remember, all you've got to remember basically is this pink area between 1825 and 1775, and we might range in that block for a bit of time. And so we'll be looking to sell on rallies, buy on dips, sell on rallies, buy on dips, and continue doing that until we eventually break out, possibly higher. And when I say trade this range and I say sell on rallies, I mean buy on dips, cover at the top there. I wouldn't be looking to sell in this area, but I'd be looking to take profits on longs whenever we get up to 1825. Eventually, hopefully, we'll break out through there, move back up to 1875, and then back up to this 1950 level where we are at the where we were a few days ago, and then eventually, I think, a breakthrough 2000 and a move up. There are lots of people that are predicting $2,300, $2,500, some even saying $3,000 by the end of the year. I think that's a wee bit optimistic, but I certainly think that we could get up to 2,000, 2,200 in that region and then consolidate there for quite a period of time until we start to see interest rate hikes stop and actually reverse. In other words, a Fed pivot, which will be the key to potentially much more rapid growth, increase, escalation in the price of gold. So that's my kind of overall strategy. We're going to be playing it within those sort of limits. So looking to trade in this pink area, buy on dips, exit, buy on dips, exit, until we get out of there and we start to move higher. And then it'll be buying dips all the way up until we get to this previous high. Let's see what happens there. And then perhaps a move higher through the 2000 level around about the time when interest rates start to stabilize and perhaps even begin to drop. Good luck for gold trading. It's an interesting commodity. It elicits a lot of excitement, and it's a glittery, exciting commodity to trade. Take care.